Do you believe oil and gas will continue to increase in price and undervalued oil companies will benefit from this? Would you want to learn a much safer way to trade options on a great oil and gas stock that's not expensive and put yourself in a win-win scenario in this volatile market? Would you be happy earning up to $825 per trade on this oil and gas company? Well, if you would, just give me a few minutes of your time to show you how this option works and exactly how I'm trading options on this oil and gas company myself. Warren Buffett uses the strategy because you win whether your stock goes up or goes down. You make money if the stock goes up, and if the stock goes down, you get the stock at a much cheaper price. So stock ticker is SM. SM Energy is one of the leading companies in the oil and gas industry. With a market cap of almost $5 billion and sitting at a price earnings ratio of 4.9, you're getting in on an incredible price right now. The stock has already steadily gone up in the past year, and year to date, it's up 27.3%. And I believe there's still plenty of upside. Do your own research on what else it has going on for this stock, but I am bullish on this company. So first, I'm going to go to my brokerage account, Robinhood. I'm going to select sell put option. Okay, so this just basically means that I'm essentially selling insurance so that if the stock falls to a certain price, which is called the strike price, I will be forced to buy 100 shares per put contract that I sold. Now for selling that put option or insurance, I'm going to get paid for it. It's called a premium I collect. I collect the premium the moment I sell and open the contract. Now I'm going to select an expiration date. This just means how long the insurance will last before it expires. If the stock is up by expiration, I keep the entire premium that I collected. If the stock is down, the insurance buyer may or may not exercise his right to sell 100 shares at the set strike price. But regardless of how the stock moves, you always still collect the entire premium if you hold on to it to expiration. Now, one thing to note is you don't have to hold it to expiration though. If the stock price goes up tomorrow, your contract will increase in value and you can buy it for cheaper, which nets you a profit. So you can flip your contract out in a day, a week, a month, or whenever the stock goes up and you want to collect your profit. If the stock goes down, you can simply just hold on to your contract and the premium you already collected and wait it out and see if the stock price goes back up. So in the case of SM Energy, I'm selling a put option all the way out to December 2022, which is the end of this year, at a strike price of $40. That basically means if the stock goes down to $40 anytime between now and the end of this year, I could be forced to buy 100 shares of SM Energy per contract. But for selling a put option or insurance, I collect $825 up front. So if I have to buy 100 shares of SM Energy at $40, I get the stock at a slight discount and I also got paid $825. So my cost per share is actually $31.80. This is the price the stock was at in October of last year. So I would be extremely happy owning this stock at $31.80. Then I can simply ride out the 100 shares until SM pops back up, or sell covered calls, which basically forces me to sell the shares if the price goes up and I get paid a premium. That strategy is called the wheel strategy. Basically, I'm betting that eventually SM Energy stock will go up. And if and when it goes up to a point I'm happy with, I'll buy back the contract for cheaper and collect a profit. Now, if there are downturns on a stock for some time, again, I'll simply keep holding on until I get assigned or get the stock for much cheaper. That's basically how selling put options work. Option sellers never have to predict timing the market like option buyers, and often they can weather through shaky markets. They simply only have to find stocks that don't go down too much before the expiration, and they're going to make a profit. And that's what makes selling put options profitable even for the average trader like you and me. I hope this video was helpful for you. If you like this content, make sure to hit that like button and subscribe for more option ideas just like this. Thanks for watching, and we'll see you guys around in the next video.